Hi, let's talk about liens as a type of ownership restriction.
Liens. Liens are a type of private restriction. A lien is the right to retain the lawful possession of the property of another unless that owner fulfills a legal duty to the person holding the lien against the property, such as the payment of lawful charges for work done on the property, construction repairs. A lien placed against a property may or may not result in foreclosure. However, upon the sale of the property, the lien holder has a right to collect amount equal to the lien. A mortgage is a common type of lien. Other common liens are property tax liens, mechanics liens, and vendor liens. Liens are recorded with the clerk of the court of the county where the property is located. The purpose of recording a lien is to give notice to others that the lien exists and to establish lien order. Liens are encumbrances recorded in public records. Following is a breakdown defining the different liens. Judgment liens. Judgment liens are an involuntary general lien that attaches to a property after a judgment has been made against an individual for general unpaid debt, such as a medical bill. The unpaid bill is not tied to the property. Not all liens can force the sale of property. Instead, the lien will remain in place until either the debt is paid, the property is sold, or the lien expires. A judgment lien can be attached to the debtor's real estate, meaning a house, a condo, land, or similar kind of property interest. Income tax liens. Income tax liens are an involuntary general lien. Unpaid federal income taxes may result in income tax liens on property. This type of lien cannot force the sale of property when the property has been homesteaded. As stated on the IRS website, a federal tax lien is the government's legal claim against your property when you neglect or fail to pay a tax debt. The lien protects the government's interest in all your property, including real estate, personal property, and financial assets. A federal tax lien exists after the Internal Revenue Service puts your balance due on the books, meaning they have assessed your liability, sends you a bill that explains how much you owe, notice and demand for payment, and you neglect or refuse to fully pay the debt in time. The IRS files a public document, the Notice of Federal Tax Lien, to alert creditors that the government has a legal right to your property. It is possible to discharge the lien once the property tax debt has been paid. The income tax lien is not to be confused with the property tax lien or an estate tax lien. Estate tax liens. An estate tax lien is an involuntary general lien. It is created by law when someone dies. This type of lien attaches to all the assets that are part of the person's estate, including real property. It attaches to all the assets that are part of the person's estate and is security for an estate tax that may be determined to be due. If a probate assets in the name of the descendant at the time of death, is transferred or liquidated without payment of the tax, generally the lien continues to attach to the asset. If a non-probate asset is transferred or liquidated without payment of the tax, a liability equal to the value of the asset at the time of the descendant's death becomes due from the transferee. The lien can be released against the property if the assessed value is paid in its place, or lien paid in full. A lien can only be attached for 10 years per IRS guidelines. Property tax and special assessment. Property tax and special assessments are specific involuntary liens that are placed against the property immediately upon the property tax bill or assessment being levied. Property tax liens are post-dated to January 1st of the year the tax was levied. It is a superior lien, meaning it will be paid before other debt. A property tax lien is released upon the payment of the lien or upon a forced property tax sale. Although unpaid property taxes can also become a general lien against other property as well as a specific lien against the taxed property, a special assessment lien can only be applied to the property that benefited from the project for which the assessment was levied. Mortgage liens. A mortgage lien is a specific voluntary lien. Mortgage liens are created when mortgagor signs a mortgage instrument pledging the property as collateral for a loan. The mortgage lien is filed in the county where the property is located to establish lien order. If the borrower fails to pay the debt as agreed, the mortgagee can force the sale of the property. Vendor's lien. A vendor's lien is a specific voluntary lien. It is created when the seller gives the buyer a purchase money mortgage to buy the property. A purchase money mortgage is also referred to as seller financing or owner financing. A seller may agree to seller financing to earn interest on the amount loaned to the borrower or buyer, or the seller may agree as a mechanism to get the property sold. Construction, mechanics, materialman's, liens. A construction lien, also known as a mechanics or materialman's lien, is an involuntary specific lien that results from non-payment of a debt involving work specific to the property.